Good afternoon, everyone. This is Brian Overby, Senior Options Strategist at Options Play. Welcome to the morning market overview and ideas. And we're going to jump right into it. The markets are a little hectic this morning, but before we get too far along, if you're going to trade options, you should read the characteristics and risks of standardized options. Past performance is not a guarantee of future results. We're going to be showing some real market data. It's not meant to be a recommendation. All right, so last week, in general, taking Tony Zhang, the chief strategist at Options Play and the research team, and I put a few bullets together and did a market summary, which is something that I added to this little presentation every Tuesday morning. And we saw the markets rally last week, easing on U.S.-Iran tensions, lower Treasury yields with semiconductor, small caps, and energy leading the way. Now, as far as Treasury yields, they're starting to creep up now on the 2-year. So we saw that drop a little bit last week, but yesterday we saw a recent high in the 2-year, indicating that a little bit more of a look at the potential interest rate rise as we head into the end of the year, according to the Fed Fund futures. There's a much higher probability of increase in interest rates as we head into the end of the year, definitely as opposed to a chance of a cut. And market sentiment reversed as the IN threatened to close the Straits of Hormuz again, creating a binary setup for Monday's open. Hawkish Fed is really what drove yields overall, but now we're seeing yields bounce back, stay balanced. Bullish outcomes favor semis and small caps, while renewed conflicts could lift oil prices and pressure growth stocks. So on Monday, we saw a sharp sell-off in the semiconductors. Now, where this really came from is renewed concerns about the AI-driven valuations, the dash for cash. Every single stock in that respect, in the AI semiconductor space that wants to grow is trying to come up with unique ways to try to grab cash. And one of the stocks that has paid for it immensely just over the last couple of days is SpaceX. They're going to come back and do another offering to try to get even more cash after their IPO. Google got beat up this week too with their new offering where they're trying to come up with more cash. But it's interesting in that we see, well, here are some of the stocks. Alphabet down 5, Amazon down 4, Meta down 2.3, Microsoft dropping 3, and SpaceX now even right now it's even down again. It's at 152, down $2.50 in the pre-market, or 1.6% at this point in time. So it was up a little bit in the morning, but so far I've only really seen, there's really been no signs of the decline in SpaceX. Now, if you own some SpaceX, you got to consider a zero cost collar. That's a possible trade, even going out 30 days or so. You got to stop the bleeding. Another trade that I have mentioned more than once over the last couple of weeks is what I like to call a covered call on steroids. And if you'd like to know more about that, I'll finish that up at the end of the show. And all that is a front spread. It's a ratio spread. It's an alternative to the covered call. It allows you to double up to catch up. I mean, there's a lot of catchphrases that we can use with that strategy, but it is an interesting trade because of the increased volatility in SpaceX and the way the skew is. It started with vols extremely high on the way out of the money calls. Vol has dropped off a little bit in that scenario. Now it's leaning towards the put side, obviously, with the huge decline. 154.60 is where the close was last night. Iran and oil, U.S. authorized Iranian oil sales through August via 60-day license after weekend talks. Crude fell about 3% on this. So crude's been all over the place, and it's going to be interesting to see. In the pre-market, we have Carnival that's going to be announcing, see where the consumer is at. And the consumer seems to be strong, and we'll see this when we get into some of the sentiments, where the money flow is going. So we're still seeing travel stocks do okay. They're hanging in there. So just signs that people are not... Well, they're just staying confident. We're still not seeing the VIX skyrocket, but we do have the VIX up today, and then that's mainly because we have the markets leaning down so far. Right now, the NASDAQ is leading the futures lower. We have the industrials, which is one thing I meant to mention about Monday's session is, so the grab for cash has driven a lot of the industrials higher. Caterpillar had a really strong session, and that's mainly because they're going to have to spend it. If you're going to build data centers, you need somebody to build them, and Caterpillar is going to be a big benefit factor in that. And I don't really see much weakness in Caterpillar going forward because of if you're worried about that CapEx spend, look for the people that are going to be look for the companies that are going to be the benefit of that spend. Micron Technology still had a real strong move too, and they're going to be announcing Wednesday after the close, and also FedEx. FedEx has made a big turnaround. The stock has been strong ever since they decided actually to get away from Amazon and the contract that they had with Amazon, or at least tighten it up. So FedEx has been strong recently, and they're going to be announcing after the close. All right, let's get into the rest of the report. If you have any questions, please do put them in the Q&A box. I am happy to address them. I'm going to give you a trade at the end of the show. One of the trades based off of the market research, one of the stronger trades in the breakout stocks. And then, if you'd like, I will talk about ways to hedge SpaceX SPCX. All right, so right now we're still in a risk on scenario, and the marketplace is fairly strong in that we are seeing the semiconductors have came back into play, leading the market, but every time that they sell off, we are seeing the broader market pick up a lot of the slacks. So even though semiconductors were down a little bit, we're now seeing a lot of the industrials are bouncing back, and those are doing well. Like I said, with Caterpillar and some of the other stocks in the Dow Jones Industrial. The Dow Jones Industrial actually was one of the strongest indexes yesterday, and even though it is only 30 stocks, those stocks did fairly well because of, once again, if people are trying to grab all this capex, they are going to spend it. Energy stocks continued their decline. The XLE was down last week, which is the ETF that tracks the energy sector. We also see an upgrade in what is it? All upgraded to deeper weakness. That's got to be a typo. So upgraded on weakness, but we saw some deals going on in this space, in the energy space. Chevron in general had a big deal that happened this week, trying to a lot of the AI capex spend is enormous, and the energy needs are enormous. So we're seeing partnerships, we're seeing deals being done across the board, which has also led to some strength in the financials. We've seen JP Morgan and also Goldman Sachs have solid moves to the upside. And that started with the IPO of SpaceX. But Goldman yesterday was up $9, up about 1% into a weak market. And we're also seeing JP Morgan had a strong move too to the upside. Recently, JP Morgan was up almost 2% yesterday, up $6.23. We're showing a little bit of weakness. We're showing weakness across the market. And the one thing that has happened overnight is that we've actually seen the VIX spike. The VIX is up, pushing against the 20 level, And this movement out of some of the semiconductor stocks, and once again, the worry about CapEx spend is now driving the markets lower. Is it an opportunity? That is a great question. The marketplace wants, well, all of the large players in the AI space obviously feel that if you don't make the spend, you're going to be left behind. We'll see how that plays out. The market gets comfortable with it and the markets go up. Then they say, hey, wait a minute. And they see something like SpaceX coming out with a record IPO and then going back for more money. And the market says, well, let's evaluate that. And then the market sells off. So in general, the fact that a lot of the extraneous stocks on the outside that have not participated in the semiconductor and AI move are picking up a lot of the slack, and we're seeing funds come in. Notable GEV was a laggard last week. Now we have a breakout in that stock. That's one of the stocks they're going to be highlighting. The housing market is making a small bounce back. We're seeing DHI, DR Horton, is been strong, and that's one of the strongs. This is one of the stocks I want to focus on this week. Rocket Mortgage, MLM, which is also in the housing space, providing materials. A lot of those stocks are bouncing back, which is counterintuitive because we're seeing if anything, there might be a rush to the market because we do anticipate interest rates to go up as we head into the end of the year, at least according to the CME Market Watch tool. All right. So here's the playbook. Semiconductors flooded back as a dominant theme. Applied materials, what are some of the others? Intel is still strong. It's still hanging in there. Micron Technology is leading the markets, and everybody's eyes are going to be on Wednesday's earnings report after the close. TSM, also Taiwan Semiconductor has been very strong and continues to be strong. Now, the housing market, the fact that the housing market has been strong this week is just good overall for the marketplace, but it kind of shows a sign that people are worried about interest rates and where they're going. So if you are going to make the move, you've been waiting for lower interest rates. Now it's pretty obvious that they're not coming anytime soon. The 30-year has stayed around the 5% level. We broke through it earlier in this year, and we can't really seem to go back down below it, which is keeping mortgage rates where they're at least for the time being. So even though there was indications early in the year that interest rates might go down, the bond market said we're going to ignore that, and has ignored it since the beginning of the year. And we see that in the longer term bond yields at this point in time. Internationally, Japanese banks kind of came into play. We've seen stronger moves in the banks. Banks got money. People want money. So Japanese banks have made a strong move this week too. Another one just worth mentioning. And then in the energy space, we're seeing a little bit of a pause, a little bit of a sell-off in the energy space. And then I'd say in general, staples. The consumer staples have weakened a little bit, but we are still seeing movements in, like I said, the travel stocks. So you're getting a little bit of a mixed outlook, and we're dying off in the earnings world a lot. We're coming to the end of this season, and earnings never really completely go away, but we're definitely at the end of this season. We're going to see Amazon actually is kicking off their Prime Day today, so we'll get some numbers on how Amazon is doing. Walmart will also have their specials going on, so we'll see a little bit of how the consumer is doing in that area after this week from those numbers. Semiconductors, the flood is back. Industrials is the surprising one as far as the money flow is concerned. And the other thing is travel and leisure. We're still seeing money flowing into that area. Where the pressure is, big tech. We're obviously seeing the sell-off in SpaceX. That's probably the most notable one. And also seeing some energy stocks that are selling off. Even though we are seeing some deals in the energy space, money's flowing out of the energy stocks. And here is the leadership and pressure at a glance, and always focusing on the early breakout stocks. These are the stocks that Tony and the research team at Options Play are looking for strength in the early breakout, and then building into leaders, and then eventually becoming confirmed leaders. Not implying that the confirmed leaders can't continue to go higher, but they're saying this is where the big move is starting. One of them is DHI, and I'm going to highlight that. But these are the stocks that are building, are starting to break out. Then eventually they become building leaders, and then they become confirmed leaders. Obviously, we still have the semiconductor stocks all strong in the confirmed leader space, and this is part of the reason why that's a risk-on market, is that we're seeing a lot more stocks over here on this side, as opposed to stocks where we are getting laggards in the market. We have up 39 from last week, so 68 laggards that are in the market. Netflix is one of them that's been struggling. Kind of surprising to me after the Warner Brothers deal. They're flush with cash, and the stock is just waning, and it's a laggard in the marketplace right now. They're looking to try to make a deal, and they can't get any deals done. So that stock has sold off, but I do think there's some opportunity in Netflix. If you're avoiding all of the AI and CapEx spends, and Netflix is one of the companies that's in that area that still has strong growth, just a strong management team, and has sold off, shown some weakness. Microsoft is still in the hardware software debate and AI debate. That's been weak for quite some time. Also, healthcare is now in the laggard column. We showed some strength about 2 or 3 research reports out, but now we're coming back into the fold where healthcare is building some weakness and is a laggard in the market. And then here's the early breakdown stocks. So if you were looking to get short something, these are stocks that would be of interest as far as the pressure is concerned and the leadership in that space. Here are the top ideas for the week. So based off of everything that we mentioned inside the research report, these are 7 stocks that are in the early breakout phase that are of interest based off of the momentum of the marketplace that we saw last week. And GEV, GE Vernova, sharp bullish reversal. I think GE has been a strong stock. You haven't gone wrong with it. It's got decent markets as far as the option markets are concerned, and you're also seeing some volatility with a little bit of predictability to the upside. So I do like GE Vernova, and it's been a good stock. We've done a lot of short bullish call spreads in GE Vernova on the way up. I'm going to highlight DH Horton. We're going to look at a trade in DH Horton, and that goes along with Martin Marietta Materials and the breakout there. And this is in the housing material space, obviously. And also all 3 of these stocks, including Rocket Mortgage, and I once again looking at the CME potential for a rate hike as we head into the end of the year. That has a little bit to do with Rocket Mortgage. People are kind of like, we're going to give up. We want to make this move. Let's go buy a new house or sell a house or do what we've been sitting on for quite some time. And then Airbnb. This is a travel stock that has showed a breakout this week. And then we had a couple in the semiconductors. Roblox is a very volatile stock. The markets aren't quite as tight in there, but also Teradyne, TER, in the semiconductor space. Fresh breakout. If you're looking into semiconductors, this is one of them that we'd like to highlight. All right, so My name is Brian Overby. My X.com handle is at Brian Overby, but let's run on over to the Firstrade homepage, and we are going to look at DR Horton. Strong volatility, bouncing off the 200-day moving average right here, trading within the channel at this point in time, but we do kind of have a building of a wedge pattern from here on up, from here on down. But right at this range, we're going to end up selling a short call spread, looking for a little bit of a movement off of this momentum area, adding the support and resistance. We obviously have a fairly strong channel in DR Horton. But right here at this level, we're going to look to go out 38 days, and we're getting real solid risk reward with the stock trading right about 156 at this point in time. We can go out and look at a 10-point wide call or short put spread, driving the markets a short put spread 10 points wide and be able to bring in almost half of the width of the spread, which is $4.37. Now, on the open, with the weakness in the marketplace, you can probably move these strikes down if you're interested in doing that trade. From 155 to 154, we're looking at $11 or 11-point wide spread, pulling in $4.43. Very solid risk reward numbers on a short put spread. We're going out 38 days, but we do have earnings in July. So these are all the things that we want to be highlighted on. And obviously, inside the Firstrade options wizard, we're seeing the earnings date be highlighted. So solid risk reward. We're seeing a downturn in the market. So if you're looking to adjust this trade based off of where the market opens at, want to look at selling something fairly close to at the money. We still have the momentum in general in the housing space, and that's going to be the trade. It's hard. Well, let's put it this way. You want to see where the market opens at, see if the general market, if we can get a little bit more of a bounce back. This is one of the stronger momentum sectors, so I would wait until the open, look at it about 10 o'clock, and see where the market is at. And then this is the one trade highlighting this week in the market overview. If you are interested in looking at SpaceX, one of the things, well, the market, I don't know if we're going to get real quotes here because the market, they're cleaning out the quotes. Yeah, everything's starting to move away, but they're still inside the options play platform. A zero cost collar. So I'll pull up some of the research here. Let's look at SpaceX. And at this point in time, most of the people that have participated in the IPO, SpaceX is once again looking lower even now at this point in time. Let's see where we're at. We have the S&P 500 index down 1%. Dow futures are down 0.3%. Actually, once again, then the industrials are one of the stronger markets, even though it's down 1/3 of a percent. NASDAQ futures are down 2.47% right now. That's what it's indicating on the open. And we see the Russell futures down 1.2%. VIX has jumped. It's above 20 at this point in time. And we actually see gold down. So the safety trade isn't even there. Bitcoin is down. Oil futures are down, but still very strong movement to the downside, which is good overall for the economy. Obviously, $73.40 a barrel. So here's SpaceX. If I'm looking to, I'm just going to click on bearish here, and I'm just going to look at buying a put outright. And let's talk about the cost of that put option. If we buy a put right now, market's at 154.60. The most at the money put, and we'll click on this, is a $22. Well, we're going to change that up a little bit. Let's go out 30 days. If I'm buying protection, I very rarely want to go out more than 30 days. That would be about the maximum. But there's sometimes where there's instances. But the biggest thing about the put is if the markets do go down, or the markets do go up, then that put, you either have to roll it up, you have to do something with it. I like to try to pick a time frame where, well, I bought the put as protection, the market went up, now I'm just going to go out and buy another put. I don't have to think about rolling it, moving it in that direction. I like to stay in that time frame. Sometimes it's 2 weeks, 3 weeks, but in this instance, we're going to go out 31 days and just look at the value of the put. It's $16.15 to try to protect the stock at $154.60 to the downside. This is the zero cost insurance, or the zero deductible insurance. You're paying quite a bit for that, which would make sense with the volatility in the marketplace. So how do we modify this trade? Well, let's go down and look at something about 10 points out of the money. We'll say, okay, if the market goes down to 145, then I want my insurance to kick in. So I'm going to modify that trade. And we're going to go down to the 145 strike. And we see that at the 145 strike, that's trading for $11.60. Still very expensive relative to the stock. And now how can we get that lower? Well, one of the simplest things to do is go on out and sell some premium on the upside. And with upside call volatility, just volatility in general in SpaceX, everything's expensive. We can go to add a leg here, and let's add a call. Stay in this same range. We can go about 15 points out of the money on the upside and get it done for very close to zero in this instance. So 65, that would be 170. And now you have 10 points of downside, 15 points of upside, and it's going to cost you $1.20 to put the trade on. And let's click trade here. And this is a collar scenario. Now the market on SpaceX is already down 1.5%. But in this instance, I'm saying I'm going to stop the bleeding at 145 over the next 31 days. And on the upside, I don't want the cheese anymore. Let me out of the trap. I would want this to be somewhere close to where I bought the underlying stock at, but if not, you have to decide, do I want to put this trade on to try to protect myself? Stock is going to be volatile. Everybody loved, this was probably the most bullish I've heard from pundits on most of the financial shows after an IPO. We even mentioned, we actually somebody asked me a question about SpaceX, and I still said that most IPOs, even though SpaceX is a different one, obviously setting records for valuation on the initial public offering. But with that said, most IPOs struggle after the 6-month period. And SpaceX, it hasn't taken that long to do it, but the sell-off, it would have been real interesting if they hadn't announced that they're going to try to raise some more capex. But with that said, this is one way to hedge if you want true protection. I got the symbol wrong. This would be a sell, but it's still there. 80 cents net debit to the account at the midpoint. But with that said, it's not quite a zero cost collar. So with where the markets are at, you'd have to adjust it anyways. But you're looking going out 30 days, 10 points down, buying that put, and 15 points up. And now you're only playing in between the strikes. Now, this is if you own 100 shares of SpaceX. This is a collar trade that helps you get in and protect yourself on the downside without all the risks, or giving up some opportunity on the upside. Now, the last trade that you might want to think about doing is the last trade that you might want to think about doing is the covered call on steroids. So inside my website, theoptionsplaybook.com, if you look at a front spread is what I was talking about with the covered call on steroids. So let me add that position, and then I'll address your trade here, Ernesto. Let me go look, or your question, I'm sorry. Let me look at SpaceX. We're going to modify this, and we're going to do a ratio spread. This is going to be a call. We're going to go, we'll stay at the 30 days just to keep it relative. There's also like a 16-day possibility too. We're going to go up. Let's go up to the let's go back to where the market was at. We'll go 170, and then we'll go up to the 190s. 20 points higher, $6.70.90. We're going to sell 2 by 1. Okay, so if you look at this, this is called a front spread. And we're getting this done for a net credit of $1.60 for every 1-by-2 ratio trade. And the risk is unlimited because we have sold 2 and we have bought 1. But if you have 100 shares of stock, this whole thing turns. The entire position will now look more like a covered call because the 100 shares covers that second call option. And by doing this, you basically own SpaceX on margin and you have to be able to do spread trading in your account, but you would own SpaceX on margin between the strikes. So from 170 to 190, you're long an extra call option. So the stock goes up 1, you have the potential to make 2 as expiration approaches. So a potential to make an extra 20 points from 170 to 190. And you can't usually do this in a normal stock. I mean, if you're looking at 3M, if you're looking at Walmart, there's just not enough volatility to be able to pull off a trade like this and get it done for a net credit to the account. So you're selling 2 of these at 620 and buying 1 of these at 1080. That would be the midpoint for these trades, for these options. And if you got that all done, we're pulling in a net credit of $1.60. And if you look at the profit and loss graph, then it highlights that if the market goes down, you still got a small pill to land on. You're pulling in $160. And like I said, this covered call on steroids is what I like to call it. It's a front spread if you own 100 shares of the stock. Is just an interesting way. I want to try to get some of my losses back. Most of the people would be at a loss at this point in time in SpaceX if you still believe in the company. This is the more bullish play. The other play is the panic play, which is the collar. All right, Airbnb. That's part of the research. A, B, and B. Very expensive stock. It's not a bad one to sell. To sell short put spreads on to be bullish. We got the IV rank around 40. So 43, here's the question. So this is a great question only because this is right in the time frame. Do you want to avoid earnings or do you want to be a part of that earnings forecast? So I'll give you 2 choices because obviously this is risk on if you're doing it around earnings. And if you want to get bullish on Airbnb, 38 days. Oh, there you go. So this is a decent. So we're 10 points wide. We're bringing in a third of the width of the spread, going out 38 days, avoiding that earnings. That's a very solid trade. Market's at 390, so we're selling the most at the money. So the trade that is picked out by the Firstrade platform, by the options wizard inside the Firstrade platform, I think is a very solid trade. You're bringing in a third of the width of the spread, which is the standard on options play. That's all of our education pieces say we want to try to get at least that, and you're avoiding the earnings. Now, if you bring in earnings, which I don't mind doing an earnings play with the intention of not really writing it the entire, we're not going to write it, pat 44 days. Usually if we put on a short spread, we're out at day 21 as expiration approaches about half the time. Look to get out of the trade most of the time anyways, even if the market doesn't move, because you're just looking for time decay. But with that said, let's modify this trade. And let's go 1 week past. We got to go to 59 days. Okay. If we wanted to include that, and then we would go down, I would go down a little bit. 135, 125. Let's look where that's at. Now, okay, so now you go down 5 points. You're still getting about a third of the width of the spread. 325, not quite. We'd need it to be 330 to be a third of the width of the spread. 10 points wide. But now we're going down and we're 4 points out of the money. But we're going out 59 days, 59 days. I like the first trade that popped up better. I like that one better. Avoiding earnings, getting a third with selling something more at the money. Markets are down though, and I'm sure Airbnb is going to be down too with the rest of the market. A, B, and B. So it's hard to look at these bullish trades knowing that the market's going to open down. It's down 0.5%, down 69 cents right now, trading at 138.50. All right. Well, a little bit over. Any more questions? I think that is the only one that I see. All right. And anybody have some SpaceX shares? I do think that as far as SpaceX is concerned, there is something to do to try to protect yourself, to try to stay in the positions. People usually just, when this happens, when you have an IPO like this, people usually just hang around and can't sell it because they don't want to be wrong, and they do nothing with the options trades. Now, you can actually even pull that in tighter on that front spread. Instead of going 20 points wide, giving yourself an additional 20 points of upside from 170 to 190, you could go 10 points wide and bring in a bigger credit if you're a little bit more worried about the downside. Even selling a call option outright is an interesting trade, but then again, you got to be worried about getting pegged. The SpaceX is moving a lot in the aftermarkets too, so you have to keep an eye on it if you want to trade it. All right. Well, thanks for coming, everyone. Brian Overby, optionsplay.com. My book is called The Options Playbook, if you want to check it out. And we will see you this Wednesday. We're going to have an education piece on trading using ChatGPT. So a very interesting webinar that I will be performing on Wednesday at noon Eastern time. Thanks for stopping in.